please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Arun Jaitley is back as India's finance minister, resuming office after a 3-month hiatus due to a kidney transplant. Today, he took charge at the Finance and Corporate Affairs Ministry, hitting the ground running by holding meetings with his secretaries. But the task before the finance minister is challenging. The key concern is the rupee, which has depreciated, but the depreciation so far has been gradual and calibrated. When Jaitley left North Block, the rupee was hovering around the 68 mark. Today, it's well above the 70 mark against the dollar. 3 months back, India's trade deficit was about $14 billion. At the end of July, it's crossed $18 billion, hitting the highest level in over 5 years. The current account deficit is also under pressure. In fact, just yesterday, Nomura predicted that the current account deficit is likely to be closer to 3% of GDP by the end of this year. Now, just to put these numbers in context, crisis-ridden Turkey has a current account deficit of 5%. The Finance Minister of Punjab, Manpreet Badal, while welcoming Mr. Jaitley back to North Block, highlighted the challenges before the government. He said, and I quote, "India is facing once again a pressure of a rising current account deficit, which admittedly by the Finance Ministry itself may cross 2% and may also a possible fiscal deficit with GST collections nowhere close to expectations. Global tensions on tariff protection continue to haunt a stable trade environment. With the dollar touching 70 within a matter of last few months, India has to quickly address all of these and many other issues. I wish Mr. Jaitley well, both to take care of his own health as well as the health of the nation." End of quote. Well, joining us now to discuss the state of the economy and the challenges as Arun Jaitley returns to office, Saket Mishra of Venus India Asset Finance, Ajay Chibber, visiting scholar at George Washington University, and A.K. Bhattacharya, editorial director at the Business Standard. Gentlemen, appreciate you joining us here on the program. AKB, let me start by asking you, I listed out some of the challenges that we face on the macros today, and this perhaps is going to be the big challenge that Mr. Jaitley will need to contend with as he resumes office in North Block. What would you be most concerned about?
Well, I think, you have listed all the major challenges quite correctly. His plate is going to be full, but the biggest challenge to my mind is going to be on the fiscal consolidation front. Now, if, in an attempt to address the other issues, he loses the ball as far as fiscal consolidation is concerned, then I think he will lose the entire battle. So for him, the important goal would be how he can make sure that the 3.3% of fiscal deficit of the GDP, that target is maintained, particularly because his disinvestment track record so far in the first 5 months so far we have seen is just around 5 to 7,000 crore against a target of 80,000 crore. Yes. And the GST revenues are still early days, but my sense is that with the GST amendment already the compensation cess amendment bill already been passed, he will be able to rely on much of that 90,000 crore of compensation cess that is being allocated under this category. So I am not too worried about GST because I think he will manage to rustle up some revenues on GST. But I'm indeed worried about the demand for more investment and more expenditure in an election year. That is what worries me the most, and that will, to my mind, will be his biggest challenge, how he maintains control over the government's fisc and not allowing further slippage in the fiscal deficit target. And at the same, because the pressure on him will be huge because the 3 state elections are going to be there. He probably will be under pressure to not raise prices on petroleum products. So I think the pressure will be huge, but his important goal would be to stick to that fiscal deficit target. And he should not unduly be worried about the rupee depreciating. The way the rupee is depreciating, it is depreciating in a very gradual way. So RBI is taking good care of that. I'm not too worried about that, but I am worried about the government's pressure that it will come under on account of the fiscal deficit.
Absolutely. Expenditure management is going to be critical. And Mr. Jaitley so far has always batted in favor of fiscal consolidation and fiscal prudence. And this is going to be a tough challenge, as you rightly pointed out, ahead of the crucial state elections. In fact, there is a BJP executive committee meeting slated shortly, where I would imagine that some of these issues will be brought up. But let me go across to Ajay Chibber now. Mr. Chibber, you've written an interesting piece where you say that watch out for the Cobra effect, where the solution is far worse worse than the problem. And you talk specifically about several issues, including trade policy, sir. And widening trade deficit is a concern, going up to a 5-year high of about $18 billion. You also talk about a more insular approach that India seems to be taking, especially when it comes to our trade policy. You're saying Make in India has now become Make in India for India. You believe that this is a misstep on the part of the government. What would you be most concerned about as Mr. Jaitley resumes office and looks at issues like trade, which are at the forefront today?
Yeah, I think, thank you very much. I think, you know, we do have a rising current account deficit, largely due to, of course, oil prices, and also partly because we allowed the exchange rate to appreciate by my calculation about 20% over the last 3-4 years. And also, of course, exports have been very sluggish. But now in trying to solve that problem, we shouldn't create a bigger long-term problem, which is why I call it the Cobra effect. You know, by trying to now clamp down on imports and increasing import protection, we could be sliding back to where we were before pre-1991 liberalization, when in an import substitution regime, we ended up with what we call the Hindu growth rate of 3 to 4%. So we got out of that, and we are now growing at 7 to 8%. We do have a temporary current account problem, but as you have said, and as AKB has said, this can be handled. And we are sitting on large reserves, so we shouldn't be panicking ourselves into longer-term policies which will actually hurt us in the long run.
Right. Let me come across to Saket. Saket, you know, one of the challenges that this government faces, and Mr. Jaitley will have to now look at, especially ahead of the state elections, is what's happening as far as rural wage growth is concerned. Let's just look at the numbers. The average between FY13 to FY15, nominal growth of about 21%, real growth of about 11%. The average between FY16 and FY18, nominal growth of about 5% versus real growth of about 0.45%. This is going to be a challenge that this government now needs to contend with. Do you spend your way out of the problem? What do they do?
Well, I think, you know, just to go back to the points that Mr. Chibber made and AKV made earlier, I'd be reasonably confident that this regime with Mr. Jaitley coming back and even prior to that with Mr. Goyal, they will remain reasonably sane about how they manage the economy. So therefore, there isn't likely to be a particularly populist sort of economic policy or spending their way out of trouble or into electoral success. Specifically coming down to rural economies, the real challenge there is in terms of creating opportunities for people in rural areas, providing credit to them wherever it's required, and ensuring that the sort of leakages that happen to middlemen by adding efficiencies into the rural sort of agricultural marketing process are improved. So I do not think the answer is spending their way out. Clearly, some amount of help has been provided by the MSP, but that's not the answer. At the end of the day, the answer is in better productivity and reducing leakages, which I think the government is moving forward towards.
Okay, so what is it that your expectation would then be in terms of any new measures, or is it likely to be execution and focusing on implementing the many schemes that are already in place? Because this is now the final countdown to the election.
I think that's absolutely right. Look, there are three parts to what the way we have to manage our economy and currency, right? First part is things that we can do, which is ensuring fiscal stabilization, ensuring that our deficits don't go out of control. Second part are things that we will not be able to control, which is how much oil comes in, how much import of electronics happens. I mean, that's clearly going to put pressure on our current account deficit. And the third part is going to be around curbing speculation. So the first and third are exactly where I think Mr. Jaitley and the government will work. They will ensure that they continue on the path to fiscal discipline, ensure that the platform that is being put in place for business remains in place, hopefully work towards increasing investment in the economy and growth of capacity, and at the same time, the Reserve Bank, which has done a remarkable job of sort of controlling inflation, continues to act as a bulwark against speculative activities, so drawing out liquidity when necessary, etc. So it's going to be, I don't think it's going to be about announcing new schemes and throwing money out.
Okay. AKB, would you agree with that? Because even if I go back to the Prime Minister's 15th August address, with the exception of the Ayushman Bharat scheme, which was already a previous announcement and a date for the launch of the scheme was put out by the Prime Minister, there was no other new announcement per se. So do you believe that that's likely to be the case, or as we get closer to the election, perhaps we could see some forward movement?
Well, so far what we have seen from whatever the Prime Minister has been talking about from various different forums, we haven't seen the announcement of too many new schemes, apart from the Ayushman Bharat scheme, which was in any way was a budget announcement. So I'm of the view that I think what you will see in the next 10 months or so is the rollout of those schemes, and if there are some collateral requirements to roll out those schemes in a big way, there would be some expenditure slippages on that front, but they will not be very substantial. But then there will be a demand on the government to invest in a bigger way from the government side on big infrastructure projects, and that, to my mind, to do it in a year when the fiscal deficit is going to be a difficult target because of the revenue shortfalls that are being feared, will be the danger point. And I entirely agree with my other panelists, Mr. Chibber and Ketan, that the protectionist trend needs to be curbed, because we have already seen duties being raised on a large number of items. I don't think they are going to help us in the long run. On the contrary, they will undermine the inherent efficiencies and the competitiveness of the Indian industry. So that is not a good way to go. What is necessary probably is to tap into the incipient rise in the corporate sector's growth. I think the first quarter results have shown that the top line growing by almost 19 to 20%. So there is a sign that the consumer demand seems to be on the upswing. There are a large number of consumer goods companies which are once again have seen not only a higher top line but also even higher bottom line growth. So I think it will be a good opportunity for Mr. Jaitley to use this opportunity to create conditions through policy changes by which the private sector comes in and steps in the investment gap that everybody recognizes to meet our various challenges. But to use the government funds at this point in time to spur demand and spur growth will probably be counterproductive, particularly because of the fiscal deficit challenges.
Right. Let me take that point across to you, Mr. Chibber, that given the fiscal elbow room and the constraints that we see on that front, the government's ability to spend to prop up growth will probably be limited or constrained, as Mr. Bhattacharya pointed out. But what could be those policy interventions that we could expect or you would like to see in order to bridge the gap between what the private sector can and should be doing on the investment front?
So I think, I mean, if you look at the private investment, it's been down for several years now, and there are some signs of a pickup, although they're not very strong. And I think the whatever infrastructure spending has been done so far has been in the right direction, because infrastructure spending, all our research is showing, crowds in private investment. Now, whether this recovery will be strong before the election is hard to say, because I think people will also be holding off till want to see how the elections play out. So I expect a stronger recovery by next year after the elections, and also it gives time to Mr. Jaitley and to his team to keep their focus on addressing the banking sector problems, which need. Of course, this IBC process is playing itself out now, but to try and accelerate all of that and get that in shape, because I expect the bigger recovery will come possibly after the elections next year. So trying to do things now, to spend money here and there and everywhere is not the right solution.
Right.
Of course, there will be some
Okay.
ribbon cutting ceremonies here and there, and that's all right as long as not too much money is being spent on any of those things. Thank you.
Okay, ribbon cutting ceremonies perhaps is what we should expect. But you brought up an important point on the banking sector, the NPA problem, as well as the new idea there on outside of the IBC, the AMC plan that the government has now decided to take forward. We'll discuss all of that and more when we return. Stay on with us. You're watching the CNBC TV18 special. We discuss the macros as Finance Minister Arun Jaitley returns to North Block. Welcome back to our special broadcast as we discuss the challenges that face Arun Jaitley as he returns to North Block as Finance and Corporate Affairs Minister. Saket, I want to pick up on the point that Mr. Chibber was making there on NPAs, on the banking sector, on this new plan that the government had put in place, the AMC, under the Sashakt sort of policy. Do you believe that there is likely to be the same enthusiasm to take the AMC plan forward?
There should be, because I mean the scope of the problem is so big that they need the AMC, they need banks, they need new private sector involvement, everything that can actually reduce the load on banks. Having said that, I think my personal view is that eventually the solution has to come from within these institutions and in a sort of partnership with the IBC process. And if you're seeing the steel sector is an indication, clearly the banks are going to possibly get a much better return on their NPLs than they'd expected. So to my mind, the primary responsibility remains and will essentially have to remain within the banks to resolve the issues, and with an assurance of private sector participation at the right price. I do not think eventually the new money has to come into banks or into this sort of large NPL pool. That money can't necessarily come from just an AMC. It needs money from real players globally and in India. And for that to come in, we need to establish a market and a pricing mechanism, which the IBC is doing. So for me, that pricing mechanism of these NPLs and a rigor of actually pursuing these things to create that price is more important. And eventually, my personal view is that we should actually incentivize the banks that actually recover better with easier recap terms.
Okay.
So,
just since you spoke of foreign investors, before I get AKB and Ajay Chibber to weigh in on the points that you made, how do you believe that foreign investors are now going to look at the next few months, outside of the equity markets where there has been a fair degree of volatility with FII flows, but outside of that, from a strategic investment perspective, do you believe that it's going to be more wait and watch as we get closer to the elections?
I think it's specific. As you said, the equity sector is a trading book which runs separately. The debt book will remain reasonably buoyant because people are interested in debt and investing more. Strategic players coming into the country will continue because for them it's a 10-year, 15-year horizon. An election here and there doesn't really make a difference. So I don't see too much change in the policies of people who are coming in. So for example, I think there was a discussion about infrastructure.
Yeah.
And we clearly need new financing or new sources of financing for that sector. People who want to come in, whether it's the Japanese or it's people from the Middle East funds coming through our infrastructure fund, I don't think their perception will change because we're talking about a 10-year horizon with the investment payback over that period.
AKB, would you agree with Saket that there will continue to be the enthusiasm that we just saw being exhibited with this AMC plan that the government has put forth? Do you think that is going to continue to get the kind of support that we saw in the past?
Well, I broadly agree with him, and also I agree more with his reservations that he expressed about the alternative Sashakt plan, because I think there's a real danger of the focus being shifted away from the IBC process. I think the IBC process that this government has worked out is, in my view, is probably more transformational in a certain way than even GST, because it will put in place a system by which exit is easier and possible in a time frame. So therefore, I think anything that is being done to probably might dilute the process of IBC is to be frowned upon. My fear is that the alternative processes that have been introduced, whether it is through the intercredit arrangements or through the AMC, might detract from the IBC process that have been put in place. Mind you, the IBC process does need a lot of fixing. In a sense, there are problems with the IBC process, and those IBC processes have to be, to be put in shape. So, NCLT mechanism, the infrastructure has to be created. I think there is a lot of delays in decision making. So the entire government focus should be to make sure that the IBC process is stronger, more transparent. There are no legal delays. Already there are many cases that have gone beyond 270 days. So I think by trying to create an alternative mechanism for resolving the stressed asset problem is probably not a good idea at this stage when you have got an IBC which is legally mandated and legally cleared and transparent, and which has met the general approval of the system in general. I think is not a good idea. So I would say that its time has come where put all the focus and energy on IBC and make sure that that system works, and that system ensures that the India's twin balance sheet problem is brought under control and almost eliminated.
Yes, and that will continue to be a challenge that the government faces. Remember, the Estimates Committee, the Parliamentary Committee, has in fact now even asked Raghuram Rajan to appear before it to discuss the matter of dealing with NPAs. But let me go back across for final comments to you, Mr. Chibber. At this point in time, growth continues to look strong. We are making a swift recovery, growing at about 7% at this point in time. What would you believe needs to be the big priority areas, the focus over the next few months?
So I think, like I said earlier, I think this twin balance sheet problem is really the big albatross around our neck at the moment. And if despite that we are growing at 7 to 8%, that just means that we could be growing at much higher rates, 9 to 10% over the next 5 years, if we can get through this banking mess that we have. Now, on the AMC, I share Mr. Bhattacharya's views and also the other panelists. I worked 30, 40 years around the world, and I really can't think of places where AMC-type solutions have worked. And I mean, there was this debate on the bad bank and the IBC, and now we decided to go down the IBC process, and I think we should let that process unfold, and I think all the weight of the government should be between now and the election to get as much of that resolution done as possible, and then consider the options after that. But if the AMC distracts from that, I think that's not a good thing. The other thing that I would like to say is that I think what GST, IBC, now Ayushman Bharat, which actually is a successor to the RSBY scheme, it tells us that there is a lot of consensus among the political spectrum on the direction of the economic policies of, there might be big differences on social issues, but on economics, there's a lot of convergence. But I do think election time does make some difference to investment decisions, nevertheless, because, the emphasis of every government is different. So a full majority government after the election will have quite a different flavor to it than a kind of a coalition-type arrangement.
Coalition, yes.
Which we have seen in the past, where, things get slowed down a bit. So if we are to grow from 7, 8 to 9, 10% growth, I think then getting through this banking mess will be very, very important. We have GST in place. We can then ramp up more spending on infrastructure and, get the exchange rate right, push harder on more strategic trade and industrial policy, and then I think India could see 9 to 10% growth in the future.
Well, that certainly is the aspiration, and the building blocks are in place. We just need to ensure that the momentum continues and the tweaks are made to improve execution on ground. A.K. Bhattacharya, Ajay Chibber and Saket Mishra, appreciate you joining us here on the CNBC TV18 special as we talk about the challenges facing the economy as Finance Minister Arun Jaitley returns to office. From all of us here for now, goodbye. Many thanks for watching.